So in this video, we're going to figure out what the best International Developed Market ETF is, and if that sounds like a lot, let me walk you through what exactly that means. So according to MSCI, which makes a bunch of different indexes that you've probably heard of, and I'm sure a lot of your funds actually do track some of these different indexes that MSCI has actually made. And so this is how they break down what international and global and developed markets and emerging markets looks like. So on the top here, you have MSCI ACWI and Frontier Markets Index. And so it takes this index of like all these, let's say, international companies, and it breaks it down, right? So it takes the whole entire globe and it breaks it down and it chops it up into different sections. And so you have the MSCI ACWI Index, which includes MSCI Emerging Markets Index, which is all of these different emerging markets. So Americas, Europe, Middle East, and Africa, and then Asia. And then you have MSCI World Index, which is the Developed Market Index. That's what we're talking about today. We're talking about developed markets. This has the Americas, so you have Canada in there, you have the US, but we're not going to talk about US stocks in this. You have Europe and Middle East, you have Pacific. So I hope that makes sense. This video today, it's about international ETFs, and we are talking about developed markets right now. I'll do another video about emerging markets, but today's developed markets. All right, here's the thing. We're going to look at these ETFs, we're going to see some returns, and you're going to say, those returns aren't very good. And I just want to get this out of the way and I give you some context about investing ETFs internationally versus domestically here in the US if you're an American. So this is a chart that's showing us the different time periods of emerging markets and how those markets have done versus the US market, the S&P 500. Now, why am I showing you this? I just want to show you and point out the fact that there are times where different markets do way better than the US, and there are times when they do not. In recent memory, in recent times, if you've been investing for the past 10 years, the past 20 years, you have seen a terrible international market compared to your US market. So in that situation, you would be like, why would I invest internationally? The US has been so good. So for example, if you look at 1988 to 1994, emerging markets did way better than the US. 95 to 98, US did way better than emerging markets. And then vice versa until 2010, and then this whole thing reversed, and since then, emerging markets has just been losing out to any type of domestic S&P 500 investing. So I hope that makes sense. I hope that puts things into context. I'm not trying to tell you if international is better right now than domestic or emerging markets is good. Literally, I'm just trying to figure out what the best ETF would be to invest in, given a bunch of different things, okay? All right, so we have 5 different ETFs to talk about today. First off, we have VEA. VEA is the Vanguard FTSE Developed Markets Index Fund ETF shares. We have EFA, iShares MSCI EAFE ETF, SPDW, the SPDR Portfolio Developed Markets X US ETF. We have the IDEV, iShares Core MSCI International Developed Markets ETF. We have SCHF, the Charles Schwab or the Schwab International Equity ETF. And so here you're going to see the category of these ETFs. They're all foreign large blend. So foreign large blend, what does that mean? So of course we know foreign's outside the US because we're talking about in the context of the US here. Large meaning large cap companies, so larger companies, not smaller ones. And then you have blend. Blend is going to be growth companies and value companies all kind of mixed in together. It's not going to pick one or the other. Okay, so let's go on. Expense ratio, very important part of all these videos that I do on these subjects. So net expense ratio, 0.05%, so very low expense ratio for VEA, 0.32% for EFA. That's the highest one we have in this category. 0.04% for SPDW. We have 0.04% for IDEV, and we have 0.06% for SCHF. What do we always do? We say, okay, well, why is EFA so much more expensive comparatively to these other ones? And of course, it's not that expensive, 0.32%, not that bad. But it is comparatively, right? So let's figure out what's going on there. Why is that? Is it a better ETF or are they just overcharging you? Okay, this part's exciting because right now in the US, yields, they're not good, right? So if you invest in a dividend ETF, you're going to get like 2.5%, maybe 3% if you're lucky, and you'll get, of course, hopefully some growth, some capital appreciation. These are paying much better yields usually. So we have 3.69% yield for VEA, 4.59% for EFA, SPDW 3.93%, 4.16% IDEV, and SCHF 3.9%. So we're getting some decent yields in these ETFs. That's actually pretty exciting. All right, let's talk about the returns now. You're going to not like what this looks like. And like I said, just remember, there were times where investing in outside the US did really well, and there were times where it did not do well, and the past 12 years has been terrible for investing outside the US. So that, just take that with a grain of salt. Okay, let's talk about the returns. Now, the first thing is SPY. This is with dividends reinvested, 380% return. I mean, awesome, really good. And this is, by the way, going back to about January of 2010. Now, then we have VEA, SPDW, SCHF, EFA. Don't worry about IDEV because IDEV was not concepted. There was conception date was in March of 2017. So don't worry about that one right now. So we have VEA on the top, we have SPDW, and then we have the other ones. Okay, so there we go. Just keep those in mind, VEA, SPDW, SCHF, EFA. Let's go now a little sooner. Let's go to the 5-year. Let's see what happens there. So now we're on the 5-year. IDEV now has been, the conception date is within this range. So this is actually an active ETF now, so we can actually look at these actual returns. So IDEV is the best one at this time period. Now, what I'm going to do is I'm going to kind of just pull this forward, and let's watch to see what happens as time goes on. Or we're going to watch which ones kind of switch it up here. So IDEV is staying on top for the most part. Most of this time period. SCHF is now kind of in second. VEA is in second. IDEV, VEA, SCHF, IDEV, VEA, IDEV, IDEV, VEA, IDEV, SCHF, IDEV. Okay, and so as we get even closer, which I do care about kind of what's going on recently as well, because different kind of market sentiment, macroeconomic things going on right now. So it is nice to see IDEV is kind of holding up also when things have gone down pretty badly. So very interesting, honestly. IDEV seems to have been doing the best. IDEV also, I will mention, has the highest dividend or the highest distribution yield. So that's also an interesting thing. Okay, let's talk about the portfolio, and then I'm going to give you my answer, which of these I think is the best. So portfolio-wise, we have VEA has $146 billion in assets under management, so it's huge. EFA, $47 billion, $11 billion SPDW, IDEV 7, and then SCHF, $27 billion. They're all big. They're all decent size ETFs, right? They're all over $1 billion, so pretty good size when you look at it that way. Next up, let's take a look at the top 10 holdings if you want to see that. Nestle is in the top of VEA, and Nestle is in the top of all of these, so they all like Nestle. And actually, we see quite a few different stocks are in the top few. Samsung's on here a few times. Shell is on here. AstraZeneca, I see here is AstraZeneca's in a few of these as well. So you're going to see some overlapping stocks as well. Now let's see how big the average of these companies are in the different ETFs. So we have mostly around, let's say, 39% is the lowest of giant caps and up. And then you have large caps, which are around, again, pretty high. So majority of these companies are going to be large/giant caps. You're going to get a few mid caps in here, and then you're going to get some very small amount of small caps and micro caps. So mostly this is going to be what I would consider to be large giant cap companies with a little bit of medium caps in there as well. But mostly, of course, it's larger companies. And so let's talk about the top 5 countries in each of these ETFs. So Japan is the number one in all of these. So Japan apparently is very popular right now to be investing in. I guess they're finding a lot of decent stocks that they like inside Japan. I'm not sure why. Maybe valuation, maybe it's super cheap there. I'm not sure, but Japan is number 1, UK number 2, Canada is number 3 in some of them, Switzerland is number 3 in EFA. Switzerland it switches up, then Switzerland. We got France in here for EFA. We have France as the 5th most popular. We have Australia as one of these, right? So, okay, as you can see, they're all developed markets. They're all, decent economies, right? So the first world economies, and that's what we're looking at here. So next thing I want to do is I want to give you my answer. So I think my favorite ETF for a developed international ETF is this one right here, IDEV. You got 20.92% in Japan, you got UK, you got Canada, Switzerland, France. These are the makeups of it if you really want to look at everything. And then we're going to go back. Let's take a look real quick. I'll show you exactly why I like it. So a few things. First off, the returns were good. The returns compared to its peers were good, right? So that's what you want to see. You want to see that it hold up over time in different kind of macroeconomic conditions, right? So now it's a bit different than what was going on a few years ago. And so we have also 0.04% is the net expense ratio. So it's very cheap. So it's actually tied as the cheapest ETF in here. I love that. And then on top of this, it's got the highest yield, second highest yield, sorry. I said it had the highest yield before, but it has the second highest yield. EFA has the highest. So second highest yield, lowest expense ratio, probably has done the best in terms of return for all of these, reinvesting those dividends and that yield. So that's what I got. So let's take a look at the chart real quick, and then we'll get out of here. So here's the chart. Okay, here's the chart. We're not going to do anything crazy on this. I know you're probably not trading this. You're not traders looking at international ETFs. I mean, maybe you are, but we're going to just take a look at two things. Two things I'm looking at. So first thing, let's just draw a little channel on here to see what's going on. So if I'm just looking at this in terms of channels, right? It's in a downturn channel. Obviously, it's been in it for a while. It's been in it since mid of 2021. Let's say it's down in this channel. It has touched this downtrend channel multiple times down here, and it is bounced up, and it is kind of in the middle of the channel, right? There's a bunch of different gaps in this area. Gaps get filled, as they say, so it's maybe these gaps have been filled. It's up here, it's coming up, down a little bit, and one thing I don't love to do is assume that it's going to go one way or the other. You know, you want to make sure there's some type of confirmation. So I don't see much confirmation. It's just sitting in the middle of a channel. However, we take a look at the indicators. So we have declining RSI, we have declining MACD. So as it slows down, maybe this RSI gets a little closer to this oversold territory. Could be good. Right now it's not there. Same with MACD, it's still kind of high. So basically, I'm not seeing much bullishness right now in this chart. Now, there's another way to look at this. This could be the inverted cup and handle. So what that means is we can see a little cup here pattern. So if we go like this, so it's inverted, of course, so it's upside down, but so this would be kind of, you know, the cup, the base of the cup. You have a handle here. So there you go. That's the cup, that's the handle. It's actually a bearish pattern, so that's not good. So what usually happens in cup and handles is it could go a little further down, and so that's not necessarily a good thing. So I don't like what it looks like in terms of technicals. So in general, not seeing much bullishness going on. However, I like the ETF as the different ETFs of the ones we just talked about. This one's my favorite. So that's all I have for today. Thank you so much for watching. Hey, check the affiliate links below if you want to support the channel. And you know what? Subscribe. Hit that like button and watch another video. It's coming up right now on the end screen. So watch it now. Thanks everyone so much for watching. I do want to remind you I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence.